Hello class. I've got my camera off so that I can make my Excel screen bigger. And so what I'm going to do is we're going to walk through inventory costing. And when we walk through inventory costing, what we're doing is we're looking at how much are we going to allocate to cost of goods sold? How much are we going to say that is left in ending inventory? So it's kind of like if we had an office supply store. You couldn't tell me for sure if it was the dollar binder that we sold or the one that we paid $1.10 for, right? It's not like if we had a car lot where you know exactly how much it cost. So we have a merchandise company, and I'm going to walk through how to do first in, first out, last in, first out, and average cost. So what you need to think about is, first of all, when you're given the data, you want to take anything that has to do with sales out, because what you're looking for is just this information. What you use sales for is this, to figure out how many units were sold. So you want to, anything that has sales, just set them off to the side so that you have your beginning inventory, what you purchased, any other purchases. And then what that does, then you say, okay, so if I had my beginning inventory and this is what I purchased, what did I have available to sell? I had 57 units available to sell, and they total $773 in value. Now look over at, the information that you're given about what was sold. You sold 25 units. Okay, so if we sold 25 units and ending inventory is 32 units, that means what we sold, those 25 units go to cost of goods sold. Okay, now everything we do is going to be in layers. So first in, first out. What that means is that from a cost flow perspective, not a physical flow, a cost flow perspective, we're going to assume that the first units that came in are the first expenses that go out. So first in, first out. So if I'm doing cost of goods sold, I'm looking at what went out. So cost of goods sold is what went out. So if I'm doing cost of goods sold and I'm looking at what went out, first in, first out, am I going to go from the top down or the bottom up? First in, first out. I'm going to go from the top down, because the first ones that come in are the first ones that go out. Okay, now I'm going to say, well, I sold 25 units. So I need to account for 25 units. So I'm going to start at the top. So I have 22 units at $10. And then how many more units do I need? I need a total of 25. I've accounted for 22. So I need 3 more units. Those 3 units are going to come from my second level, because first in, first out, these I've accounted for, and now 3 of these at $15. So my cost of goods sold is 25 units, and the total cost is $265. Now I'm going to do ending inventory with first in, first out, and I'll show you how you have some check figures. So ending inventory. So ending inventory is what's still left there. So if what we sold, if cost of goods sold started from the top and worked my way down, where does ending inventory start? What's left? Am I going to look at the top for what's left, or am I going to look at the bottom for what's left? I'm going to look at the bottom. So I'm going to go bottom up for ending inventory. So in ending inventory, I have 32 units. So I'm going to start at my bottom layer. So I know that I have 14 units at $17. Okay, but I need to account for 32 units, and I've accounted for 14. So I'm going to take the rest out of the 21 units. So 14, 18 units. 18 out of here, and that makes sense for a couple of reasons. One is it adds up, but the other reason is that if I take 18 and 3, that equals the 21. So now I've accounted for the 22 units there. I've accounted for 3 of these 21, and here I've accounted for the other 18 of these 21, and I've accounted for 14 of this bottom. So I've accounted for all of my units. The other thing that I know is my cost of goods sold is $265. That's what's going to be on my income statement. My ending inventory is $508. That's going to be on my balance sheet. When I add those two together, I should get 773. What did I do wrong? 18, 19, 20, 21, 15, 17, 10, 15. Oh. Wait, what is my problem? Oh, that's 265. That was right. And 508, 773. There we go. So when I take 265 plus 508, I get 773. And that makes sense because remember I said that all of the inventory has to be one of two places. It either still has to be an ending inventory or it had to go to cost of goods sold. It can't be anywhere else. So my goods available for sale ends up one of two places, either sold and it's in cost of goods sold, or it's still an ending inventory. So when I add my cost of goods sold and my ending inventory together, I should get the same amount as my goods available for sale. So that's my check figure, my 773. All right, so I'm going to hide these so that we can look at last in, first out more easily. All right, last in, first out. The last units that came in, we're going to assume are the first costs that go out. The last units that come in are the first costs that go out. So for cost of goods sold, am I going to start at the bottom and work my way up, or the top and work my way down? Last units in are the first ones out. So I'm going to start from the bottom and go up. All right, so cost of goods sold, same thing. I sold 25 units, but this time I'm going to start at the bottom. So I'm going to take all 14 of the units that are at $17, and I still need 11 more units to get to 25. So I'm going to take 11 of the next layer. So I'm going to take 11 of the units that were bought at $15. So my cost of goods sold is going to be $403. Now, ending inventory. Now I'm looking at what's still there. What's still there. So if the last ones in are the first ones out, where do I start for what's still there? Do I go from the bottom down or from the top? Do I go from the bottom up or from the top down? I'm going to go from the top down. All right, so I have 32 units in ending inventory. I'm going to start at the top. I'm going to take 22 units at $10. I need 32 units and I've accounted for 22, so I need 10 more. So I'm going to take 10 of these 21 at $15. So my ending inventory is $370. When I add together my cost of goods sold and my ending inventory, I get my goods available for sale. So I know I did that correctly. All right, third type, average cost. Average cost in a lot of ways is the easiest. So we're going to do exactly what it sounds like. We're going to first figure out what's the average that we paid for our inventory. So if I bought 57 units and I paid $773 for those units, my average cost is $13.56. And then I'm going to look over there and ask myself, does that seem like it could be the answer? Well, I bought some for 10 and some for 15 and not as many for 17. So yeah, $13.56, that looks like it could be the average cost. Now all I have to do is say, in ending inventory, I had 32 units at $13.56, gives me $434 for ending inventory. For my cost of goods sold, I sold 25 units at my average cost of $13.56. So I'm going to assume my cost of goods sold was $339. And if I added these two together, and there isn't a rounding issue, I get $773. Okay, so when you're doing inventory, think about layers. Now, tomorrow we'll look at how to do it when it's a perpetual method, but it's still layers. And the quiz is like this. So if you understand this, you're good on the quiz. But if you understand this, you're going to have an easier time with, doing perpetual. And then I will also start going through the last two chapters, which doesn't have nearly as much material as these two.